You are looking to buy a house. The Fed's interest rate hike today may not impact the housing market as much as you think. Today's hike is the fourth this year in an effort to curb inflation. Local real estate and mortgage experts say the hikes are bringing interest rates back to earth. Fox 40's Zach Boedo is here to break down how this will affect the housing market. Zach?
Nikki, by increasing interest rates, the Fed hopes to slow down the rising costs we're all facing. This basically means that your debt will accumulate faster, then in turn taking you longer to pay it off. This process most likely means some people will no longer be able to afford to take out home loans due to those higher rates. And with less demand, there's more supply for people looking to buy. Eager new home buyers may be reconsidering their purchasing power after today's interest rate hike.
If they were already in a position where they didn't have that wiggle room, now they're either dipping lower in their purchase price and what they can afford, or they will wait it out.
With higher interest rates, your money doesn't quite go as far, so some may choose to stay where they are, giving others who are ready to move an opportunity.
There's less competition, more likely to get a seller concession, get a discount on price, and a bunch of good things for buyers.
Historically, interest rates have been as high as 15%, so the 5% might not seem so bad. But looking back during the height of the COVID pandemic where rates are low, you might think you missed out on a great opportunity.
If you were looking for a house last year, it's harder to deal with the rates going up because you know what your payment could have been. But a lot of people are just starting now, and you're still in a 5 1/4 is still a really good spot.
With less demand comes more supply, slowing down the economy and giving Americans the chance to catch up on things like supply shortages.
The real estate market's coming down to earth, which is a good thing. It was on fire, and some markets saw 20, 25, 30% price appreciation, which isn't healthy and it's not sustainable.
The big takeaway is that those mortgage rates won't be affected much.
Everything that the Fed plans to do to hike the Fed funds rate, which is going to affect a lot of other things, not specifically mortgage, is already set. We already know what they're going to do.
Rates are expected to keep going up, but there is light at the end of the tunnel.
I would tell a home buyer looking to buy a house in the second half of 2022 that the good news about interest rates going up is that it's actually quelled demand to the point where you can go out and negotiate your home price. You can go out and negotiate to get a seller credit. So albeit interest rates are higher, there's a lot less demand, which means a lot less competition.
And a new study by the Sacramento Appraisal blog shows 50% of homes listed in the Sacramento region have reduced their selling prices. Nikki?
Zach, thank you.